Hello. Thanks for joining us on Footprint Report, where we dive into the latest news and trends about tokens, projects, protocols, and more. In this video, we'll talk about Bitcoin ETF. The first US Bitcoin ETF, the ProShares Bitcoin Strategy ETF, also called BITO, launched in October after much anticipation and reached $2 billion AUM in just 2 days. Since then, a handful of other ETFs have gone public in 2021, but many still wonder why they shouldn't just buy Bitcoin itself. In this video, we will show you several situations where Bitcoin ETFs are a better investment than Bitcoin. First, let us learn about Bitcoin ETF. A Bitcoin ETF, exchange-traded fund, works in a similar way to an investment fund. It allows you to buy into the fund and receive shares, which are then traded on a stock exchange. Bitcoin ETFs hold Bitcoin futures, or real Bitcoins once spot ETFs are approved, for their investors, meaning you don't have to worry about looking after them or handling day-to-day tasks associated with trading cryptocurrencies. Instead, all you need to do is buy into the fund and watch your investment grow. Some notable Bitcoin ETFs are Grayscale Bitcoin Trust, ProShares Bitcoin Strategy ETF, Purpose Bitcoin ETF, Valkyrie Bitcoin Strategy ETF. Before we consider which one Bitcoin ETF is best, we should understand why. Reason 1. Tax savings. In most jurisdictions, taxpayers must pay capital gains tax when they mine or sell cryptocurrencies. For assets you've held for over 1 year, Americans have to pay 15% to 20%. In both the US and Canada, the maximum contribution to tax-free savings accounts is $6,000. First, if you would invest $6,000 in BTC and 5x your money in a year, for example, if you bought before this latest bull run, you would probably have to pay $3,000 to $4,000 in taxes. Second, using a tax-free savings account, you will pay nothing on that $6,000 per year. Since you can also purchase options in a Roth IRA or DFSA, your leveraged gains can be significant if you successfully swing trade. Reason 2. Leverage trading. Canada, the UK, and now Singapore. The list of countries where people cannot use Binance, the only platform that offers comprehensive leverage trading and options for crypto, is growing. Luckily, anybody can start trading with leverage on BTC ETF. Crypto investors are more likely to predict BTC prices and swings. Several alternative market indicators have emerged that could possibly give crypto traders an advantage over those who use traditional financial analysis techniques. The high degree of correlation between crypto ETFs and the price of BTC also makes it easier for traders to predict prices. If the price of BTC swings upwards to its long-awaited 100K mark by the end of March in 2022, and we retain a 90+ correlation coefficient between ETFs and BTC, you could see gains of 4 or 5x with options on BITO, GBTC, or BTCC, rather than just a 2x on BTC. Reason 3. Simplicity. Most people do not like to manage or handle their own investment accounts, not to mention setting up a SEX account and learning to understand crypto. Bitcoin ETFs give them an easy way to invest in Bitcoin from their existing savings accounts. For investors who are new to crypto, they are more likely to choose the Bitcoin ETF for the above reasons. That's all for today. If you like this video and want to find out more about Footprint Reports, then watch our recent video on Footprint Reports, linked below. If you're feeling bullish on Learn to Fi with Footprint, hit that like button and subscribe. Check out our other content, and get one step closer to blockchain analytics. See you next time.